Ed, I'm going to let you answer that question. I mean, a lot of people saying that this rally is artificial, it's stimulated, you pump so much money into the stock market, it has to go up, but that what comes up must go down if the fundamentals aren't in place and that a correction is in order. What do you say to that, Ed?
Yeah, I mean, your basic premise is, I have to be honest with you, is actually not because of stimulus and money going into the economy and being pumped in. There was a lack of clarity. Let's be very honest. During that time period when Obama took office, there was a tremendous lack of clarity of what was going on around the world. Obama has done absolutely nothing to make the stock market go higher. What has happened was we had clarity on earnings. And this is what I've done. For 25, 26 years, this is what I've done. And Mark, with all due respect, I know that you're not an investment person. So let me share with you exactly what took place. We had the market fall because no one had any idea where earnings were going to come in. When we realized that the world wasn't coming to an end, that's when stock prices started to move higher. Yes, the market has gone up 74, 75% since Obama took office, but he deserves zero credit for that. Quite frankly, the credit belongs, Mark, to the corporations that have had to endure all of the negative rhetoric from Obama, all of the anti-business, regulations that Obama has put into place. The market actually should be 30% higher than it is today.
Okay, so President Obama
should be 30% over where it is right now. Those are the facts. When interest rates are as low as they are, stocks should be 15 to 20% overvalued.
So let me get this right.
They're 20% undervalued.
President Obama does 3 times as good as President Ronald Reagan. He does so, I agree with you, by giving certainty to the market. We were in free fall. Remember, the Republican Congress would not support a surplus. They would not support bringing us out of the Great Recession. And Obama did several things. One was the fiscal stimulus, but that wasn't the only thing. One was the thing from my former boss, Congressman Barney Franks. What Dodd-Frank bill did is it made the markets be more secure. You know that the reason we have this mess. Hey, Ed, let me make my point, then I'll let you respond, all right? You know the reason we're in this mess is because of fancy Wall Street derivatives, credit derivative swaps, and that whole mess being unregulated. What Dodd-Frank did is it said, no, we're going to bring this out, these trillions of dollars in a secret economy where banks are over-leveraged. We're going to take these toxic assets and we're going to bring them out into the public so people can see what they're investing in. And another thing we're going to do is we're going to let shareholders control CEO salaries. That's also in Dodd-Frank. The bill is good for shareholders. It may not be as good for CEOs.
Well, I'm going to jump in here because regardless, Ed, give me a second here. I'm going to let you have the first word on this one because regardless of what the markets say, the fundamentals of the economy are not good. Unemployment is at 8.3%. The housing market still hasn't found a bottom. Consumer sentiment is weak. So can the Obama administration's policies be blamed for that if the administration's policies should be given credit for the stock market rise? And Ed, we'll give you the first word.
Well, first of all, I want to go back to this. He's talking about Barney Frank. Well, first of all, the reason that we are in this trouble, yes, I agree. There have been, credit default swaps and so on. But the question is, where did that originate from? And, you worked with Barney Frank. I think, we could have a whole nother discussion about that. But the point is that Dodd-Frank has actually been anti-business, has not done anything to help the stock market. Matter of fact, if you talk to any CEOs in any corporation, it is the anti-business regulation, lack of clarity today that is costing people 30% more on their portfolios than they should be. The president has done nothing to make the stock market go higher. In fact, he has hurt business.
I would say, Ed, it's really hard when you see the market go up 75% and say President Obama has done nothing. The market was at its maximum low in 12 years when, in March 2009, just when President Obama's policy started to go into effect, I'll tell you what I did. I took all my money out of CDs and I put it all in the market because I knew that with a Democratic president, the market always goes up, and lo and behold, it did.
That is
just a bunch of nonsense. That is absolute nonsense whatsoever.
Well,
Let me also say this to you.
I did. Bill Clinton, too, and my money grew from 92 to 2000, did very well.
No, that is wonderful, okay? And I'm really happy that that happened for you, but you cannot give the president the credit for that. You have to give corporations and people having clarity.
And
the president
to that point
is not this ruler of the economy, of the world economy.
And to that point of corporations, we have to note that corporations have record high corporate cash levels. They have a lot of cash on board, perhaps because of all the uncertainty of what future regulations may be. And companies are very lean, productivity is up, balance sheets are stellar, borrowing costs have hit rock bottom. And a lot of that is due to the companies downsizing, not so much consumer spending.
I would argue that, in fact, we need to have more middle-class demand to make the economy go even stronger. The companies do have record profits. They've got lots of money. They need a place to put it. And giving more money to wealthy people, the way Mitt Romney wants to do, would be exactly the wrong thing to do because it comes out of middle-class pockets, and then there's no demand for products. Demand for products is what makes the economy grow.
I'm so tired of that liberal.
All right.
I'm so tired of that liberal bias. I got to make. Let me make one point.
Ed, we're running out of time. Ed, we're running out of time.
You know, I want to have another chance. I want to get back at this at some point.
We will touch back with you again. Thank you very much, Ed Butowsky in Dallas, and thank you, Mark Levine, joining me in the studio.